what really stood out to me as a fundamental analyst and a prior life, a semiconductor analyst, was the cash. The amount of cash that this company is generating at this point. It's just huge. I mean, their free cash flow was almost $17 billion for the quarter. That's an increase of 138% year over year. That was growth 150% higher than their sales. And so that puts their current cash balance at almost $40 billion, and that's after $11 billion in buybacks. So that's a lot of money for NVIDIA to continue to scale and innovate and keep ahead of their competitors.
One of the main factors influencing the stock market is still artificial intelligence, AI. The largest early benefactors were chip makers and cloud computing firms, but software companies are also beginning to notice some pleasant growth prospects. Nevertheless, one of the greatest locations to locate reasonably priced AI-related equities is still the semiconductor industry. Nvidia, the second largest corporation in the world, has emerged as the biggest AI winner to date. In order to help speed up the rendering of visuals in video games and other applications, Nvidia first created a new kind of semiconductor device known as a graphics processing unit, GPU. Nvidia dominated this specialized market for a very long period. With the aid of its CUDA software platform, which made it possible to program the chips to perform jobs more effectively, Nvidia was able to extend the usage of GPUs to other industries. As a result, more developers learned how to use CUDA to program GPUs, which in turn led to the developers buying NVIDIA GPUs to work on. This created a positive feedback loop and contributed to the vast moat the firm currently enjoys. The company's growth in 2016 to 2017 was fueled by the use of GPUs for cryptocurrency mining, while NVIDIA's explosive expansion in 2021 to 2022 was caused by the use of GPUs for AI inference and large language model (LLM) training. NVIDIA's GPUs are now the foundation of the AI infrastructure, and because to the large market share it acquired with CUDA, it currently commands almost 90% of the industry. The CEO of NVIDIA claims that the present demand for its chips is insane, as the leading IT firms in the world compete to dominate AI. The stock is most at danger from a slowdown in demand. Nonetheless, the majority of NVIDIA's biggest clients had stated their intention to keep increasing their investments in AI infrastructure in order to capitalize on what many considered to be a once-in-a-generation opportunity. Additionally, NVIDIA benefits from the fact that these businesses require exponentially more processing power, and thus more GPUs, to train their AI models in order to enhance them. The stock is trading at a favorable valuation, despite its massive increases over the last 3 years. According to analyst projections for 2025, its price-to-earnings P/E ratio is roughly 33, and its price/earnings-to-growth PEG ratio is roughly 1. Growth stocks frequently command PEG ratios well above 1, although a PEG ratio below 1 is typically regarded as inexpensive. As we approach 2025, all of this gives NVIDIA a compelling choice to think about purchasing this month. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video. We'll examine how NVIDIA compares to the other AI stocks that investors most likely overlooked. AI is progressively influencing a wide range of sectors, including cybersecurity, website design, and healthcare. Businesses are using generative models and conventional AI to enhance consumer experiences, diagnostics, and operational efficiency. AI has many advantages, but it also brings with it new difficulties, particularly when it comes to protecting sensitive data. Future growth will depend on how well companies balance the benefits and possible drawbacks of AI as they continue to develop with it. Nathan Gooden of Squarespace, Whitney Joseph of Zotis, and Guy Melamed of Varonis discussed their perspectives on using artificial intelligence into their companies at the CNBC CFO Council Summit on December 4. These CEOs talked about how AI is enhancing their business processes, enhancing customer experiences, and tackling new issues in fields ranging from cybersecurity to animal health and website creation. They also looked at how generative AI is developing and how it might affect their sectors in the future. Whitney Joseph talked about the application of AI in animal health, pointing out how conventional AI is being included into animal diagnostic platforms, like a system that rapidly examines slide photos to detect health problems, with the potential to be extended into human healthcare. Nathan Gooden emphasized how the platform has long used machine learning and how generative AI has been incorporated to make the website building process easier for users. Guy Melamed discussed how AI has two effects. It can improve customer protection while simultaneously offering risks, such revealing sensitive data through Copilot and other AI capabilities. His business specializes on using these AI technologies to secure data and stop unwanted access. According to a December 5 Reuters story, Nvidia and Italian firm iGenius are working together to install one of the biggest installations of Nvidia's GB200 NVL72 servers, which have 72 Blackwell chips each, at a data center in southern Italy by the middle of 2025. The initiative, called Colosseum, will make use of Nvidia's software tools, such as the NIM platform, to facilitate the smooth deployment of AI models. This year, iGenius, a company that develops open-source AI models for sectors including finance and healthcare, has raised €650 million and is looking for more funding. The advanced capabilities of Colosseum were demonstrated by some models that could approach 1 trillion parameters. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video. Liontrust Asset Management's Claire Pleyel-Bouverie recently spoke on CNBC on December 3 and offered her thoughts on the condition of innovation today, especially in Silicon Valley. Innovation is not only ongoing, but it is accelerating, she underlined. Because of this quick change, it is necessary to visit the area frequently in order to identify which businesses are thriving throughout this shift and which are not. The clarity surrounding these companies is getting better every quarter, according to Pleyel-Bouverie. She stated her strong conviction that the beneficiaries of the current technology cycle, which started with the introduction of ChatGPT and the AI revolution approximately 18 months to 2 years ago, will be very different from those of the previous technology cycle. Even while well-known names are still relevant, she is concentrating more on prospects outside of the Mag 7. The market trends for 2025 were also discussed, with a particular emphasis on AI infrastructure. According to Pleyel-Bouverie, there has been a focused effort this year to develop the computational infrastructure required before monetization can take place. In order to scale AI capabilities, this infrastructure includes networking components as well as silicon and semiconductor devices. She noted that there is a continuous arms race to create huge foundation models, even though model providers are frequently seen as commoditized. Even while the AI infrastructure layer now holds the majority of the value, engineering tools that make it easier to integrate AI into diverse applications and enterprises are also essential. Pleyel-Bouverie predicts that in the future, attention will turn to application layers, where significant disruption is anticipated. There is a competitive landscape as seen by the large number of AI startups aiming to take on well-established firms like Salesforce. She thinks Nvidia's role in AI infrastructure is still very important in spite of this change. It is positioning itself to become the operating system for an emerging landscape of AI-infused software set to launch in the coming year, she said, describing its role as vital. Pleyel-Bouverie advised investors to grasp the company's strategic posture inside this technological paradigm change, rather than just considering it as a chip supplier. Her observations are part of a larger story about Silicon Valley's continuous change and what it means for investors trying to successfully negotiate this quickly changing technical environment. Here is a list of the top 10 tech stocks for long-term investing as these firms continue to gain popularity. As a pioneer in GPU technology worldwide, Nvidia is at the forefront of innovation in a number of fields, such as artificial intelligence, gaming, and driverless cars. It is especially well known for being a major contributor to the AI revolution. The business unveiled enterprise reference architectures at the end of October, which are intended to help partners construct scalable, high-performance AI factories. By offering suggestions for hardware and software, these blueprints make sure that businesses may effectively use AI infrastructure while steering clear of typical problems that come with such configurations. Businesses may more easily handle the increasing needs of AI workloads thanks to the enterprise RAs, which are designed to expedite the development of AI-oriented data centers. After making this statement, Nvidia partnered with Hugging Face in November to further show its dedication to improving AI research. The goal of this partnership is to support open-source research and development in AI robotics. Additionally, it introduced AI agents within its RTX AI platform, which are intended to address challenging issues and improve access to cutting-edge AI technologies. The growing need for AI solutions in a variety of industries is largely responsible for the company's expansion. This demand highlights Nvidia's significant influence in determining the direction of AI infrastructure and technologies. In its investor letter for Q2 2024, the Ithaca Group's Ithaca U.S. growth strategy said the following about Nvidia. By manufacturing high-performance graphics processing units, GPUs, Nvidia has established itself as the industry leader in visual computing. The business focuses on four major and expanding markets: professional visualization, gaming, data centers, and automotive. Some of the most intriguing fields of computing, such as data center acceleration, artificial intelligence, AI, machine learning, and autonomous driving, might be led and disrupted by Nvidia's offerings. There were two factors that contributed to the stock's increase throughout the quarter. First, there was a lot of excitement about the future of generative AI and the possibility that it would require buying a lot of Nvidia products for a long time to come, which helped the stock. Second, Nvidia demonstrated its dominance in the development of today's accelerated computing infrastructure by posting another impressive beat and raise quarter. The firm increased its F2Q 25 revenue outlook over street estimates. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.